Hi guys, my name is Phillip Warrick and welcome to my first deal, which ultimately led to millions. As you know, in this podcast, we explore the pivotal first deals in real estate that define what type of investor that you are. Whether it was your first deal that inspired you the most, or it was a challenging one from which you learned valuable lessons, each of these stories have a very unique outcome. I interview very successful investors, local real estate groups, business moguls, authors, celebrities from all over the world, providing inspiration and insight. So whether you're a seasoned professional or just getting started, this podcast is for you. And today, we got the special privilege of interviewing my friend, Luis Salavarria, who has over 18 years of experience investing in real estate, which he started in the single family space, and now he does everything from multifamily, commercial, and different things, and he's been a very successful real estate investor. So, Luis, welcome to the show.
Thank you, my friend. Thank you. Thank you for having me.
Awesome. Do me a favor and let's introduce yourself to the audience and kind of let everybody know a little bit about yourself and your background.
Yeah, of course. So I'm a real estate investor. I've been investing for the past 18 years. I actually started investing in Brazil. I was actually based down in Brazil, and my wife actually got transferred from Venezuela. That's where I'm from originally. So we were there, and that's when I decided that I wanted to do something in real estate, because I had read Poor Dad, Rich Dad by Robert Kiyosaki, and it got me thinking that was the time to do it. I was alone. I didn't know anybody. I didn't know Portuguese at the time. And I didn't have any connections. I didn't have anything, right? So I said, this is the time. So, because I didn't know anybody. I didn't know any better either. So I went there, found a bunch of people that knew kind of what they were doing. And I started, So I bought my first piece of property. I built some houses. This was, of course, after getting the permitting done, after, doing the bureaucracy that you have in Brazil and, countries like that. And after that, I was hooked. I saw that there was a potential in actually doing real estate business as a professional, and that's what I did.
Very cool. So your first deal was actually in Brazil.
Yeah. The first deal, the first couple of deals, actually like maybe 15 or 20 deals were in Brazil.
Oh, wow. Okay. I did not know that part of your story. And I know, as you know, from the first dinner that we had together with our buddy JT Fox.
Of course.
That when you mentioned Brazil and I started speaking Portuguese to you, I'm sure that kind of threw you by surprise, but it's a very, very similar, something that we had in common. And I actually grew up in Brazil. So the first 10 years of my life, I lived in Brazil as a missionary's kid. My parents were missionaries in Brazil. My mom was actually born in Brazil, right? And so that was a really cool connection, but I didn't know that you had started there and that you had bought and built houses in Brazil. So have you done any more investing there in Brazil?
Yes, so that what I just told you, I did that in a little town outside Rio. And then we moved to Rio. And then, of course, being in the big city, buying land to build, as I was doing it, it was just too expensive, right? Because I just bought a little piece of land. I plotted it. I built 5 houses and I sold them, right? Now, to do that in Rio would have been really, really expensive and not really cost effective. Because down there you have like the big rises and like these big complexes, like type of resort type of complexes, and they buy a lot of land, and because of that, the price of land is actually really, really high. It's actually one of the highest ones in the world, if you believe that, and I'm sure you know. But when I went there, when I moved, I had to pivot. So I thought, okay, so let's do something in real estate, but something different, and not build anymore, because I didn't want to do that because I couldn't do it. It wasn't really cost effective. So I found apartments in Copacabana, like old apartments that I could remodel and sell for a profit. Basically, what I'm describing is just fix and flip. Mm-hmm. But at the time, I didn't even know that was the name of it, because I'm, living in Brazil, you don't really have access to the terms and stuff like that, So that was a funny thing. And when I first came to the US, people asked me if I was, actually, they asked me what I did. So I told them, and they said, "So you're a flipper?" I'm like, "What? What is that?" You know, but it turns out that I was a flipper. I just didn't even know that I was a flipper, you know? So yeah, so we flipped a bunch of apartments in the Copacabana area, nicest beaches in the world. And then from there, we also started pivoting again. We bought a few apartments in different places of the city, and these were like condominium type of apartments where you had a big builder and people would buy off like different apartments or sections or whatever, and we would just bank on the appreciation, because at that time the economy was really, really solid and really, really nice, you know, like to invest. So we did that, and we made some good money.
Right on. That's amazing. That's really cool. So do you still have any holdings in Brazil?
A couple of apartments, but pretty much we had the idea of keeping some, and we kept some for a long time. We kind of liquidated, I would say the last 2 years, we kind of liquidated everything, because I didn't see myself going back there, you know. Now that we're living and we're citizens here, so we moved here. This is our life now. So at that time, I thought it's always good to have a backup plan, because we can always go back. We all speak Portuguese. Our first son and daughter, they're Brazilians that were born there, so that wouldn't be an issue. And we still go there from time to time. In fact, we went there to this year, actually, like in February. We went there after Carnival, and so we visited a bunch of friends, and so we still have contact, right? But we saw that the invested environment wasn't there anymore, so we just brought that money here to invest it here in the US.
Okay. Well, since you have a couple of holdings, was that family vacation considered a business write-off?
Of course.
Hey, we're not here to give tax advice or legal advice.
That's just experience. This is educational purposes only, right?
That's exactly right. But there's got to be some research and development expenses, right, for the business. And
of course,
one of my desires is to take the family back to Brazil, right? And it's like, man, if I can find a business excuse to do it, that makes sense. But I have a bigger family, right, with 4 kids, and then now our older daughter has 2 kids, and it's the desire to take the whole family, right? And so I've always
again,
go ahead.
I'm not gonna give anybody advice, but if you turn this as a member meeting type of thing, where you decide that you're gonna do your minutes, or your meetings are going to be held in, for example, Rio, right, then you can take them, and it counts.
All right.
I've done that in the past.
Yeah, that makes sense. And then even having, like, if we have other investors that want to come, right, and do a meetup there or something to that effect, right, and do some training, because I do a lot of coaching and mentoring as well. And I'll tell you another dream of mine, and as well as a lot of people know, that the people from other countries have a different type of work ethic, right, than American people. We'll just put it that way. Yep. And I've always had the desire, any Brazilian that makes it here to the US, they're pretty well off, right? They're wealthy. Yep. They're successful. Sure. They do whatever it takes to succeed. And
for the most part, yes. Yeah.
And right. And to be able to serve the Brazilian community here in the US too, like a lot of them, if the investment in Rio or in Brazil isn't as lucrative or as profitable or as safe as it is here in the US, partnering with, Brazilians that want to invest in real estate. And, one of the things too, like with real estate investors, right? Not a lot of people want to be full-time real estate entrepreneurs like you and I are, right? But they still want to invest in real estate, right? So working with them as private money lenders or private money partners is a really good way for them to be able to get into real estate without having to be a full-time real estate entrepreneur. Makes sense?
Oh yeah, definitely. I agree totally with that. And in fact, that's kind of also my idea, and not only with Brazil, but also with countries like Colombia or Venezuela or Argentina, because I know Spanish, of course, and I also know that there are people in those countries that see their savings just go to waste. They just go to zero sometimes if the inflation is high enough, like in Venezuela, for example. I think I see myself and yourself as giving those people opportunities to invest in a more solid type of economic environment.
Yeah, 100%, 100%. And the thing is, we're blessed, right, to be a blessing.
Yeah.
And I share a similar story as yours. The first thing that got me into this business was Rich Dad Poor Dad, right? That book by Robert Kiyosaki that teaches us the difference between assets and liabilities and how to generate more income than we have expenses based on cash flow from passive investments, right? And so having that knowledge and being blessed to be able to share that with other people is great, right? And if you've got investment capital that's not getting you great returns secured by real estate, that's the question that we ask, and that we share these benefits with our private investors, as I'm sure you do as well, where they can actually put that capital to work and secure it with real estate and get better returns than they would get in the stock market, or the volatility of the stock market, or bank CDs, or mutual accounts, or wherever they might have their investment capital, right? So my question to you on that statement is, first of all, how did you finance your first real estate deals that you did back in Brazil?
Self-financed. Pretty much from the beginning, everything was self-financed. So of course, I didn't know anything about financing. I didn't know anything about partnering with anyone. At the beginning, I thought that this was just something that people did on their side, like a side business type of thing, and I didn't have the mindset or the mentality or even the knowledge at that time to know any better, to know that people can actually do this a lot bigger, and it was only then. You know what? It's funny because I spent like 5 or 6 years in Brazil during the time that I was there, and I was investing. And when I came here, people started asking me what I was doing, because they saw me, they saw pictures, here and there. There wasn't anything in social media, it was just people that I talked to, people that knew me, and people that I know and that I knew then. And so they were asking me, and they were also asking me if they could invest with me. Right. And I was like, well, I didn't even think about it, but maybe for the next one. And that's when I realized that, yes, you can actually do that, and you can actually use other people's money for that. But at the time, everything was self-financed.
Self-financed. Wow. Yep. You must have been independently wealthy already.
No, it was just, a lot of work. and I didn't have any traction as I do right now because of that, right? Because of course, when you don't have any, or you don't have as much, I would say, at the beginning, then you have to find, your own sources, and it was just basically savings. It was my wife's work, and a bonus here and there. And so we would put all of the money that we had together to buy the land and to build. So of course, we had to watch every single penny, cost-wise, of course, because otherwise, we would run out of money, So yeah, everything was self-financed, but it wasn't easy.
Yeah, but you've had success with it, right? And so rather you're starting out and you have the ability to self-manage or not, would you recommend to somebody starting out, right, and to self-finance, or do you think it's better now, knowing what you know now from your experience over the years, do you think it's better to self-finance or to work with private investors and private funds?
Well, I have to admit that being an engineer by trade and liking numbers, I feel dumb not knowing that the numbers actually work better if you don't self-finance. If you actually ask for people or the bank, basically, to fund at least a part of your investments, it doesn't have to be everything,
Right.
but if you do that, then the returns are actually bigger. And I won't get into that right now, but the returns are actually bigger. And I know you know that.
Yeah.
And so my recommendation would be to know who to invest with, of course, first of all.
Mm-hmm.
But second of all, research. It doesn't have to be you that is going to do the stuff, but at least know. So when you talk to somebody, an operator like yourself or like myself, at least you know some kind of basis to which the conversation is going to go.
Right. And the reason I was asking you those questions too is really to set it up, right? To explain to people why we are willing to pay great returns secured by real estate. And you nailed it on the head. Like, it actually increases our ROI, our return on investment, or our internal return on investment when we use leverage. And by using leverage, it's less money out of pocket. So the ROI becomes bigger for us. And it also provides an opportunity for an investor to put their capital to work. So having said that, what kind of returns, when you're working with a private investor, say on one of your syndications for an apartment complex or on a deal, what is the typical returns that you usually get or, go for your private investors?
Right now, the deals that we're underwriting right now, they have to have at least a 20% IRR, basically a 20% internal rate of return for our investors. And it should be around that area, like at minimum 16 or 17, but that's like way low, and at least 20%.
That's per year?
That's internal rate of return. It takes into account not only the return itself, but also the time that the return is given into.
Okay. So what would be the average timeline then
for us, like in the commercial space, it's normal to have timelines of 5 years or so.
Okay.
5 to 7 years.
So what does that equate to in terms of like a yearly return for that?
So for example, let me give you an example. So if we have a multifamily deal, for example, going on right now, and we have an investment of 100,000 from an investor, that investor could, of course, this is all like relative terms, but like they could actually, receive maybe 100% of their investment in those 5 years, basically saying, 20% year over year. But that includes the appreciation that you're going to get afterwards, plus also the cash that you're going to receive from the investment, the cash flow, basically, that is going to get you either monthly or every quarter or semester, like every 6 months or whatever.
Okay.
But that's kind of what it is.
So essentially double their investment in that 5-year period is what
pretty much.
So if they invested 100,000, they're going to get their initial 100,000 back plus potentially another 100,000 profit. So, I mean, yeah. So if you divided 100,000 profit by 5 years, that's basically 20 per year, right? So it'll be a combination of cash flow during the investment, and then at the end, whenever the deal's sold or refinanced or cash out, right? So some money during the investment and some money at the end.
And that's really what changes the IRR, the internal rate of return, because that actually depends on the time. So say, for example, that we have a deal that we want to keep for longer than 5 years, and that we refinance that deal after like 3 years, for example, the IRR is probably going to be higher because we're actually returning that money earlier than 5 years. So even though you still get the same amount of money, because you're actually getting your money faster, then the internal rate of return is actually higher. That's kind of how it works.
Okay, interesting. Very good. So compared to what we talked about earlier, stock market, mutual funds, bank CD, or a money market account, How does that compare? Do you think that's like double, triple, quadruple the norm, or?
Well, it's difficult to say, without actually being an investor in stocks,
Right.
which I have been. And in all transparency, I'm actually researching to do that right now, again, after so many years, not because I want to abandon the real estate arena, but because my son wants to pursue that avenue as well. And he has like limited funds, and he doesn't have 25K, to invest with us right now. So I thought, maybe we can do something in the stock market to boost your earnings, so you get to that level, right? And then after you get to that level, then you pour that money into real estate. And that's kind of my thought process, right? Now, I wouldn't necessarily know if it's better or worse. Yeah,
I'll just Google real quick. I Googled real quick bank CD rates right now, right? So a bank CD rate, they're offering essentially 5%, 4.75%. So this is like, hey, if you commit your capital for 1 year, lock it up in a bank CD, they'll give you on average of, let's just average it out at 5%.
Yeah.
Right. So compared to that, I mean,
compared to that doesn't even come close. I thought you were talking about like the actual stock market where you actually invest in stocks, where you can gain, 20% in a day. Right. Then of course you can lose 40% in a day too, right? Or 10% or whatever, right?
Yeah.
So that's the issue, right?
I think the comparison then would be like, hey, if you put your money in a mutual account, like which is a combination of stocks, right? You've invested it with somebody that's managing it for you, and I think the average they get might be somewhere in the 8 to 12%.
Yeah.
And that's based on like a 10-year history. Yeah. There's going to be years that it goes way up. There's going to be years like this year where it dips way down and doesn't recover, right? But they might average that 8 to 12%, per year over a longer term period of time, right? So I think too with the real estate, right? And you can correct me if I'm wrong, but if they're investing with you in one of these deals, like with an apartment complex or a syndication, they also get some tax benefits, right? Some depreciation.
Yeah, they do. They do. They get a lot of benefits, and but like I want to go back again to that point that you made about the stock market, because I kind of misunderstood the question. If you are actually trying to be more active in the stock market, maybe you can get more money in the short run, which is kind of what I'm doing or trying to do with my son. Now, if you are trying to compare apples to apples, right? And say that in that case, I'm the investor. I have 100,000 to invest, and I'm going to give it to you, or I'm going to give it to somebody like myself, and I'm going to give you 20% returns for 5 years, and you don't have to do anything. Basically just, look up your account and see the returns going into your account. That's all you have to do, really. You don't have to do anything besides that, maybe attend, a meeting here and there, just talk about the investment, how it's going. But besides that, you don't really have to do a lot of stuff. So if you want to do that in the stock market arena, and you have to give that money to your like a mutual fund manager or somebody like that, then yes, of course. I mean, like, to get the same returns, it's difficult, really, really difficult, really, really difficult, because they are there to make themselves rich. They're not there to make you rich.
Yeah, exactly.
And that's really the main difference there.
Yeah. And so to kind of close the loop on that whole little riff of the conversation, this is why we can provide these opportunities to real estate investors, right? Or to investors that want to make returns on their capital passively. This is true passive income. In order to have passive income, you have to have money to invest.
Yeah.
Right. And then you partner with somebody like Luis that has the deals and has the ability to manage and operate that investment and do all of the active side of the work. Right. So this is why we are blessed to be able to be a blessing and to give these opportunities to investors that want to earn a passive return on their capital. And it's win-win. Luis wins, I win. We get a higher rate of return on our investment that we make. We can do bigger deals, like Luis mentioned, right? Bigger deals than just doing the single family, for example. And it helps us all leverage each other's together, right? To do better together, essentially, is the point, right? Like, hey,
Yeah,
this is why we can give such great returns. This is why it's win-win for the investor and for us as well.
it's good for everybody, to be honest,
Perfect. Perfect.
for everybody that invests, you know, as long as, of course, you invest with the right people,
Correct. 100%. You got to make sure that you're investing with people that
you
have
know.
the experience, that have the ability. And obviously, you've proven that over the 18 years of your investment.
Yeah, yeah, and some difficult situations back in the past, but also it's like, you know, like JT Fox says, right? A lot of the problems that you have, they have a first name and a last name, unfortunately, you know. And I've realized that is the case, you know. I used to just go to the person that knew about whatever, you know. Say, for example, that I wanted to do something in marketing, and I knew my cousin was good at marketing. I would go to him just because, you know, he's good at marketing, and I don't know anybody else, right?
Right.
But this kind of thinking is what actually leads you down the wrong path, because then you go to the person that you think that it's like the only one that you know that is doing something kind of similar to what you want to do, and just because you kind of think you know them, you're going to trust them. But if you think about it, you know, trust them with, you know, $100,000 just because you think you know the guy, because, you know, you think that he works in finance or marketing or something, you know, he must know somebody or whatever that I don't know, right? That's not the case. You should do really your own research and actually know if this person is, you know, who they say they are, first of all, and also if they're actually integral, if they're actually doing what they say they will do. And we've all been burned with people, especially, you know, when you're working with people. All of us can say that we were burnt with people that said something and they didn't do what they said they were going to do, unfortunately.
100%. So that kind of segues really good into my next question that I had for you. And that question is basically challenges, right? So what are some of the challenges during your first deals and the years over the 18 years of your investing career that you faced? And what did you learn from those experiences?
Well, one thing that I learned, and there are many things actually, but one thing that I learned that I can say to you right now is that you have to invest with the right people, the right team. And when I say team, it doesn't have to be other investors. It could be your contractors. It could be your inspectors. It could be your, you know, your mortgage lenders, you know, mortgage brokers, people that find you the right tools, basically, for you to be successful, you know. And if you have that, then you're way ahead, way ahead than anybody else, just by having that, right? And that's kind of a general answer.
Okay.
Now, if you want me to be more precise in my answer, I can tell you right now, for example, that in one of the deals that I invested, I didn't go as deep as I should have in the inspections section of the deal, right? So I got an inspector out. They did an inspection. I basically told the guy, just focus on the main stuff, because as long as I know that the main stuff is good, everything else follows. That was kind of my thinking, because I had used that, you know, a strategy, if it can be called that, back in the day with my residential stuff. But right now, if you don't do a deeper, you know, inspection with multifamily or other commercial properties, if you don't do that at the beginning, you will get burned, because a little thing in residential may cost you, I mean, something that you oversaw may cost you, you know, $1,000, right? It's still painful, but it's only $1,000. Now, if you multiply that, you know, one unit times 100, a little mishap, now it's not 1,000, now it's 100,000.
Right.
Which it adds up, you know. Okay. I mean, it's not like, you know, anybody's, you know, looking to give you $100,000 just because you made a mistake in your assessment.
Right.
You know, so I found that you really have to be diligent and go deeper when you're doing inspections or when you're actually looking at the property before you even buy it.
I love it. I love it. So let me ask you this.
Yep.
Do you learn more from those mistakes or from the deals that actually went right where you had no mistakes or less mistakes?
Oh man, I always try to learn from my mistakes and other people's mistakes.
Yeah.
But at the same time, once you go through issues that are really like really big issues, that's really when that event is going to show you what you're made of. So it's either going to crack you, you're going to be like basically dead in the sidewalk, or it's going to propel you to say, to hell with this, and I'm going to continue, I'm going to push on, because I have a responsibility not only for myself, but for my investors, for my wife, for my family, and for my friends who invested with me.
Right. I think JT mentions, what is it? He says, a smart man learns from his own mistake while a genius learns from the mistakes of others. And I think it's got to be a combination of both, right? Because the mistakes that you make on your own, even if you've read about it or learned about it, those are really going to set in a lot stronger, a lot deeper than the ones that you read about or learned about, right? And we all make mistakes. Everybody makes mistakes. And the point of me even asking that question and bringing it up is because a lot of people getting started and, they overanalyze things. They take too long to make a decision because they think they have to have all of the answers before they get started, right? Or they're afraid of making a mistake that it causes them to procrastinate and never get started, or get started 10 years later, right? So that analysis of paralysis, right? So
100%.
Yeah. And, it'd be a shame not to mention JT, right? Because we both mentioned JT Fox here, and that's, essentially how we kind of came to meet each other. And the point of having a coach, right? Having somebody that has made the mistakes and that has gone before you, not just reading it as theory from a book, but what do you think is the importance of having a coach, somebody like JT Fox in your corner, or somebody in the real estate industry that has experience and access and the ability to help you go through your deals and to avoid some of those mistakes? How important is it to have a coach?
Well, let me tell you, I'll answer you in a different way. I would say different to what a lot of people say, right? And I know that's different just because I've heard other people talk about this answer, right? They're going to say that it's so important, that it's so good, that you have to have a mentor, right? And the answer is yes. And I tell you, like, before I got mentors, I have the mentality of being like, we Latin Americans, we don't need anybody, like, why would you? Nobody tells you anything, because if you ask, people either mock you, either they laugh at you, they think you're crazy, they steal your ideas, or worse, right? So they try to get you out of the business or whatever, Now, my thinking before was to get a mentor. You're crazy. Of course not. I can do everything on my own. I can learn because I'm clever. I read. I go on everything's out there. Everything's on YouTube. I still feel bad for people that think that because I still hear people that actually say that to me right now. Still, like even now, they still say that to me, and it saddens me because it's like you will never get ahead. Never. People think that it's easy to just watch a video on YouTube or TikTok and get the scoop of everything. They don't know shit. They don't know anything, And do you know how I know? Because now I have mentors, And it's not only the time compression that you get by asking the question that you have in the right moment that you have, and not having to waste time reading books or reading blogs or watching videos on YouTube to actually get your answer, right? It's not only that. It's the fact that you can get a lot done faster. And a lot of these deals, they're on time, they're on the clock. If you don't give them an answer right now, today, the deal is gone.
Yeah.
So
100%.
access, right? Access to those mentors, to those people, to the knowledge, right at the time that you need it is key. So when you ask me, how important is that? It's like, how important are your legs? You can still get by them without them, right? But it's a lot easier if you have them. It's kind of the same thing. You could do still stuff with your own resources, right? You could still learn by yourself. Of course you can. It's going to take you a long time. It's going to take you a lot longer than me or Phillip, right? Or JT or whoever, right? It's going to take you a lot longer if you want to do it on your own. But why would you? Yeah, you have to pay them. Of course you have to pay them. They're not doing it for free, right? And also, let me tell you, you may think that they're charging you a lot, but it's just the time that they have to give you that it's the cost that they're actually giving you. It's not the knowledge. Sometimes the knowledge is like free because they really want to give that knowledge away, but they can't give it away to anybody that doesn't pay attention. And if you pay attention. That's all it is.
Love it. I've never heard it like that. And that means a lot, right? And so to pay for access, because the knowledge is free. You can Google it. You can go get a book at the library for $20, right? You can go the next step, which might be a live event or a seminar where it's
right,
anywhere from a few hundred to a few $1,000s. But once you get that one-on-one, undivided attention from a coach, and you actually pay for access to that, it's not that you just pay attention, but let's go back to investing. We need to get a return on our investment, right? So if you actually put capital into a coach, now you're going to have to track that. Like, hey, what did I get as a return from paying for that? Well, it basically enforces that you actually implement the advice that you receive instead of just putting it off over there to the side, right? And so
100%,
you pay attention to the advice, you'll take action on it, and you'll have the success that you're paying for that you desire. I love it, man. That's great. Very cool. Thanks for sharing. Looking back, what would you have done differently than what you've done up to this point?
If I'm looking at the mistakes that I've made, there's been a few people that I shouldn't have partnered with. So I would say if I could go back to those moments, I would have told myself, before you do that, before you invest with this person, look deeper to who they are, to what they've done, ask around, right? We tend to be blinded by ourselves, right? Because our perceptions are whatever they are. And we think that we cannot be mistaken, because we have that perception, right? Like, if you're dating, you're always thinking that your wife or your husband is the best one in the world, right? So you tend to sort of not see things that are right there at that moment. And you tend to be blind on those things, right? The same things goes for partners. So I would say to you guys, if you're on that spot of looking for a partner, or you don't know where to start from, ask Phillip, ask me, because we're going to know more, because we've been down that road before many times, so don't get burned because you didn't know.
Absolutely.
That's kind of my take on that.
Very good. Very good. So in closing, what are some life or business tips that you have for our listeners?
Learn. That would be like the premise is always learning and applying, right? Learning and taking action, right? As long as you learn something, you put it to action. And during the pandemic, for example, I found myself trying to do a lot of stuff. And of course, a lot of stuff couldn't be done because, nobody was working, or, some people were sick, or some people were just afraid to go out, or whatever, right? So I used that time to learn. So I joined, I don't know how many virtuals, I don't know how many, courses or trainings or meetings or whatever I did online, and I still do. But one thing that I got from that time was to listen to books, right? And in the last 3 years, so from 2021 till now, it's been exactly 3 years since I actually got myself into the habit of measuring how many books I was listening to.
Oh, cool.
And because it occurred to me, like this actually came from a statistic that I heard back in 2020 or so, right? I heard that the average CEO reads like 62 books per year. And I thought, oh, okay, 62 books. Okay. Man, 62 books per year. That's like more than one book per week, you know? So I thought, that's crazy. How can they do that? You know? So I thought, okay, if somebody does it, why not me? You know, let me try it and see, right? And I wasn't trying to like break the record or anything. I was just trying to follow the same patterns that I was doing. I was just like adding up. I was incorporating the books part into my life, because I wasn't gonna like, you know, only read books and, you know, not do exercise or not eat or not sleep, right? I was still gonna do those things, but I just wanted to incorporate the reading part into my life. And when I did that, it turns out that after the first year, I read, you know how many books?
How many?
65.
65 books.
65. Yeah. I actually listened to these books. I didn't read them. I listened to them, but I still listened to them. I absorbed them. I actually got the information out of them, and I took notes on each one of them. The notes that I thought were like, oh, clever. I didn't know that. Oh, okay. Even though there were books maybe around the real estate arena or marketing or selling or whatever, the stuff that I already kind of knew, there were still ideas that I didn't know or that I hadn't implemented, right? So I took those ideas and now I'm implementing those ideas because I didn't know them before. And that was the first year. The second year, I actually got 88 books. And the third year, I got 93. And I think that's going to be kind of my limit, just because now if I do more, then I will have to, like, you know, carve time out of stuff that I don't want to carve out of time of, you know, like stuff that I do with my kids and with my family and my wife. So, but I still listen to them because I want to finish them. Right. And I'll tell you, like, some books, I just listen to them. You know, it's like, okay, maybe one or two ideas, but some books I really have to dig deep. I like, oh, you know what? This is a great book. I never thought of this. And it doesn't have to be about real estate or investing or, you know, anything related to my business. It could be related to mindset or family or, you know, spouses or how to deal with children or whatever. But as long as you're learning and putting into action, right? That's really the main idea of anything. Well, I think we're all on this earth to learn, whether you know it or not. Yeah. But sometimes that's why you get the same recurrent thing that happens to you over and over. Like women say sometimes, you know, it's just like, you know, every time that I go out with these people, they're all the same. Of course, because you're choosing them the same. So you have to learn something different. So you find somebody different.
I love it. Always be learning. You said learn and apply. And, you know,
learn and apply.
One of my most prized possessions is my library and my collection of books. And I've got books everywhere, every desk, every office, every room in the house. There's literally books everywhere. And that can sound overwhelming to a lot of people, you know, but we've all heard it before. Leaders are readers.
Totally.
And very important to be reading, to be learning, to, like you said earlier, condensing knowledge from somebody else. Like you can get from a book something that took somebody 18, 20 years of life experience to condense into a book that we can buy for $20 or listen to an Audible for $10 or whatever the case is.
Yeah.
And make time for it, right? I love the fact that you listen to books. And I heard before, net time, no extra time. This is like when you can put an Audible in your ear and be listening to it while you're doing other things, while you're doing your household chores, if you do that, right? Helping around the kitchen or cleaning or doing laundry or doing the yard work, whatever it is that you do, or even commuting to and from work or wherever you go. This is when you can actually get a lot of this book in, like reading and listening to books, or when you're doing your exercise.
That's actually what I do. That's actually exactly what I do. You know, I just, as I said, like, it's not like you're adding hours to the clock. I mean, you still have 24 hours, right? But the time that you have, you just don't know that sometimes you're just wasting it, or you're not really using it in the proper manner, So if you're driving around with your kids like I do, I'm the chauffeur, and I just take them places, right? So in that time, I'm listening to books. I'm not listening to music. Sometimes I just, if they want to listen to music, then I just put my headphones on or my earplugs or whatever, and I listen to books while I'm taking them someplace else. Now, they've realized, because I've seen the changes that I go through, right? They've realized that maybe there is something there too. So what I do now is actually I put the book, the audiobook, I actually put it on their speakers, on the speakers in the car. So they listen too. And sometimes they get hooked. Sometimes they even tell me, Dad, can you stop the recording so we can listen when we come back? Because if I drop them off or whatever, they wanna basically just catch the book where they left. And it's funny, but things like that happen.
Yeah. So what's the number one book that you would recommend right now, or your favorite, or something to that effect?
Oh man, one that I really like is called Clarity by Jamie Smart. Clarity by Jamie Smart, and I really love that book. At the time when I read it or when I listened to it, I think I needed that focus, that this person actually brings you. Okay. And so I really love the book. I really, really love the book.
Love it. I'll pick it up today. So
cool.
Well, Luis, that's a wrap, man. I appreciate you being on today's show. A huge thank you to Luis Salavarria for joining us and sharing his invaluable insights. And if you're intrigued by my journey to my first real estate deal, or you want to see extra footage from interviews with incredible guests like Luis, be sure to check out the link in the comments. Just click and leave your thoughts. And then additionally, if you're looking to fund your deals or get funding for your deals, or you have deals in capital that you'd like me to consider, or if you're interested in seeing what we can do firsthand at my office, all the information will be down below in the link. And I'll also include some information from Luis where you can connect with Luis as well. And Luis, if you have any other final thoughts, comments, or questions, or anything that you want to share with the audience?
Not really a final question or anything, or comment. I just wanted to say thank you. I'm really grateful that I'm here. Okay. And if there is one person to learn from, is this guy right here, Phillip.
Well, thank you.
Such a humble guy, and I always love the times that we get to speak, and because you're really authentic, and it shows that you're really trying to help people out. And it's not only about the deals, it's not only about the money, it's about the people. Yeah. And I thank you for that.
Yeah. And Luis and I, what he's talking about is we actually shared the stage at the Real Estate Masters in Dallas, right? Dallas, in front of thousands of people, and shared our knowledge and expertise. And he's a great coach and mentor as well, somebody that you can reach out to. And like I said, we'll make sure to leave his information down below where you can connect with Luis as well. And if you know somebody that you think would be a fantastic guest for this podcast, or even for Luis's podcast, because Luis also has a podcast of his own, introductions are always welcome. And please do us a huge favor, like and share the podcast on Spotify, on Apple Podcasts. And, it makes a huge difference for not only us, but for our listeners and to the people that you recommend so they can find this valuable knowledge as well. And so that's it. We'll be back soon with other stories on our first deals, which ultimately led to millions. Luis, thanks again for being on the show. We really appreciate your knowledge and expertise. And that's a wrap for the show here today. If you'd like to hear my story and how I did my first deal and extra footage from other people that I interview, there will be a link in the comment. Just click the link on the comment as well. In addition, if you'd like for me to fund your deals, or you have some deals or capital that you'd like to fund for me, or if you'd like to be able to come to my office and check out exactly what we do every single day, the link is below. But that's it for today. If you also know and want to introduce me to people that would be great for me to interview on this podcast as well, that's always welcome. So do me a huge favor while you're still here, like and share this podcast on Spotify or Apple. It really helps out a lot, especially giving us a review. And we really appreciate everyone here today. We'll see you on the next time on your first real estate deal on the way to millions. All right, this is Phillip Warrick, and we'll see you next time. Thank you.